right, well, the stock market is officially open for trade, and we just see some consolidation this week on this Tuesday and yesterday as the S&P 500 is within 2% of an all-time high. Trade continues to be in focus, and joining me now with more is Dale Smothers. He's a founder and CEO at RDS Wealth. Dale, welcome.
Yes, nice to be here.
Yeah,
yes.
Great to have you here at the stock exchange. And where do we stand with these trade talks and what we see Wall Street monitoring as we expect them underway in London?
Sure. No real clarity yet on the trade talks at this point. Clearly that is the elephant in the room, if you will, on whether or not the market will continue to climb higher. I do foresee a restraint of around 6,100 points on the S&P 500 as we approach that. Probably start to see a little bit of volatility. And in our view, the support level could be as low as, say, 5,600, 5,700 in a more optimistic support level. This is the volatility we expect to see until we have complete clarity around the trade talks, as well as other headwinds perhaps that we see coming in the market.
So as we await any updates on those trade talks between the U.S. and China, we also do have inflation data this week. We had small business optimism improving a little bit earlier today. Last month, the index showed that. But what are you expecting from the consumer price index out tomorrow?
So this print tomorrow, I don't expect to see a significant increase in inflation. As a matter of fact, I think anything under 2.5% will be a very positive thing for the market. The core CPI, of course, is going to be a little bit of a piece that we want to watch and put a real close eye on. But the overall CPI number under 2.5, I think, is where we'll start to see that print. And at this point, that print is really kind of showing us what happened right after the tariff announcement. So the real print that we want to pay attention to is next month's print, and that's when we're going to really maybe possibly see a little bit of inflation creeping back into the U.S. economy, or at least on the real numbers.
Yeah.
Now, I'll tell you, I'm not really concerned as much with inflation at this point. I think that inflation is certainly under control, and in my opinion, the tariffs have been more of a demand destroyer, and that has obviously helped keep prices down. The prices being as low as they are in the overall economy has helped the U.S. market climb as well.
Now, I am curious because we'll see expectations from consumers on Friday, including inflation expectations. And at one point this year, we had seen consumers pricing in, Americans that is, more than 4% inflation. Do you think that those numbers are possible once the effective tariff starts to kick in?
Yeah, so the expert call for the longest time has been that these tariffs are going to be extremely inflationary on the market. I'm just not a believer in that sentiment. I think that the trade talks will become a positive thing for the U.S. economy. Inflation will stay at that 2.5%, perhaps even getting down to 2% as we see the growth of the U.S. economy continue to climb higher. Now, granted, this is an optimistic view, and if inflation does begin to creep higher, 3.5%, or my goodness, even 4%, the Fed's going to have a hard decision. They're in a wait and see moment right now. I expect probably a rate cut this summer and likely a rate cut in the fall. This 2 rate cut scenario in 2025 will likely be a tailwind for the market.
Yeah.
It could very easily be what we need to break above that 6,100.
I think a lot of this conversation, right, is based on what we've seen play out since April 2nd, which was at least initially higher than expected reciprocal tariffs, then a bit of a backtracking on that, trying to get closer to some sort of deal with China. But we know a lot of these deals are temporary. Dale, so long term, how does that factor into your view?
Well, we've already seen a net positive win in even just the China negotiations. As much as, if you look at it, as much as a 20% swing in our favor for how we tariff China's imports and exports. This is a good thing for us. The Chinese conversation, in my opinion, is one that had to be had eventually. It's better now than later. China has a completely opposing worldview, and I think that will certainly help us in strengthening America's foothold in global dominance. So, in my opinion, even though these 30 and 60-day reprieves, even 90-day reprieves get maybe summarized with a less than desired, when Donald Trump comes out, he announces this unbelievable tariff announcement that really put a lot of chaos into the market, as we all saw. I don't think it's going to be anywhere close to what he had announced, but we are certainly going to come out of this in a positive point of view for the U.S. economy.
Anything else on your radar, Dale?
At this point, keeping a very close eye on the CPI, keeping a close eye on what the Fed does this summer, and I believe that a Fed rate cut could, like I said, very easily be something that helps us catapult above that 6,100 point mark that is kind of what we have set as a restraint on the S&P 500 at this point.
All right, Dale Smothers, he's a founder and CEO at RDS Wealth, here with us in studio after the market opened. Dale, thank you.
Thank you.